industry. We will be talking about the opportunity in the region, the different focus areas that are currently being looked at by our panelists, and what's the opportunity for women to take an active role in the VC industry. We have Heather Henyon, founding partner of Mindshift Capital, a global venture fund that invests exclusively in early stage women-led technology companies. She's the founder of the Women's Angel Investors Network, the first and largest women's angel group in the Middle East, an active venture investor with passion for fintech. Heather has over 100 direct and fund investments in the US, Europe, and the Middle East. She started her career on Wall Street and has almost 20 years of experience in finance, technology, and strategy in emerging markets. We also have Noor Sweid, the founder of Global Ventures. Noor is the founder of Global Ventures, a Dubai-based growth stage venture capital firm focusing on investing in emerging markets. Previously, Noor was the chief investment officer at the Dubai Future Foundation, where she spent time developing the technology and innovation ecosystem in Dubai, and a managing partner at Leap Ventures, a growth stage venture capital firm based out of Dubai and Beirut. We also have Sonia Weymuller, founding partner of VentureSouq, which is an investment platform focused on early stage tech-enabled businesses globally. Previously, she headed advertising sales for Turner Broadcasting portfolio for children platforms across MENA. Prior to Turner, Sonia worked at Viacom's Emerging Markets Strategy Group and Microsoft Strategy and M&A team in London. She's a charter member and board director of TAI Dubai's chapter and serves as the UAE director for the Yale Alumni School Committee, and also a board member and mentor for E7 Daughters of the Emirates. Amazing panelists, welcome to all of you with us today. We would like to, first of all, each one of you to share with us your story and how did you access the venture capital industry. Heather, would you like to start?
Sure, and thanks so much, Raja, for having us here. It's great to discuss this topic, which, as you know, is very near and dear to my heart. So thank you. So I started in angel investing as a kind of reformed entrepreneur, I guess we shall say. So I was originally, I started a microfinance company for the region called Grameen Jameel, and then started a mobile money company focused on virtual micro lending. And during that time, I really saw that there were a lot of women, this is back in 2013, across the Middle East region, who were active in as entrepreneurs, and some of whom I was mentoring. And I didn't know so much about angel investing at that point. Really, I had 2 angel investors in the mobile money company in Jordan, and just, was blown away by just, all the support, the of course, the capital is one thing, but all the advice, the mentoring, the, taking me out when things weren't going well, when we were having problems with the business, counseling myself and my partner. So a lot of, what we call sort of smart money, I think, is really critical when you're starting a business. And because I knew there were a lot of women entrepreneurs in the region, I just went to some women in my network professionally and said, hey, I think there's this opportunity to invest in these companies. I don't know if these are kind of, cupcake shops or lifestyle businesses, or if these are really scalable tech companies. So we put out a call for applications. We actually got 75 companies that applied, and they were primarily tech companies. So our first investment then was Little Thinking Minds, an ed tech company based out of Jordan. And they also were our first investment in the region as Mindshift Capital. And I guess just, a lot of learning and venture is very hands-on, so you can study it. My MBA is in finance and entrepreneurship from Cornell University, but when you're, and I'm sure we'll hear this from Sonia and from Noor as well, but there's no substitute for real life experience. So now in probably the 100 companies that I've invested in across the 3 regions, I would say no deal's the same. There's always some nuance, something new that comes up. And again, because we're focused on early stage, really, it's really about the founders, the people, and of course, no human is the same. So lots of issues that evolve. And then really, I guess from all the angel investment, I became active with Dubai Angel Investors in Dubai, and then also a group in the US called Next Wave Impact, which is an early stage impact fund where I'm on the investment committee, and then 2 funds out of Europe. I just learned more and more, and then also saw the gap for female founders at the venture level. So, and I'll talk more about this, I think, later on, but just basically that was the foundation of Mindshift Capital, which we just launched this year in February and did our first close. And we're focused on the still early stage, but I would say kind of our sweet spot would be the bridge between seed and Series A rounds. We do seed rounds as well. We don't do pre-seed rounds, but we're really early stage investors who are active and hands-on with founders and focus and invest with a gender lens, meaning there needs to be at least one female founder who's on the management team. So I'll stop there, Raja, because I don't want to keep going, but yeah.
We'll come back to you, Heather, to tell us why at least one female founder. And I truly admire your views on it. Noor, would you like to talk about global ventures? How did that all come to life?
Sure. Well, Global Ventures is a firm, I guess, in the region that focuses on Middle East and Africa founders, and really thinking about how we can help these founders scale globally. So the thesis is that the region has incredible founders that are building amazing companies and great ideas. And why can't we scale them cross-border? Why can't we scale them globally? Why do we always think that we have to stick to solving a local problem? Hence Global Ventures. So it really is one of those very, very overly ambitious, I don't know if it's true or not, but I think it's true, so let's go for it, firms. And we're always looking to back founders, male, female. 30% of our portfolio is female, across their journey. We usually come in at the Series A stage, so once there's about $1 million in revenue, and when the question is, how do I go from 1 or 2 million to 20 million in 2 years? That's where generally we believe we can add value and participate alongside the founders as partners.
And yourself, you started as an entrepreneur and joined some companies and corporates in between and ended up VC. How did you land there?
End up here. I've had a very unconventional VC path. I started in biopharma consulting. I then went into family business. I also at the same time built my own company by accident. I started a yoga studio in Dubai because I wanted one and there wasn't one 14 years ago. And that became a wellness chain. And I struggled so much as an entrepreneur that I thought this can't be the way it's supposed to be. And so at the same time as kind of running, at the time it was a $1.2 billion public company, I was a struggling entrepreneur. And when the investors would ask me, what keeps you up at night on a public company level, in my head, the answer would always be my yoga studios. It's so hard to be an entrepreneur. It's much harder to go from 0 to 1 than to manage a very large corporation. And so I just started angel investing, and that was in 2009. And then as the founders needed more and more capital, I realized I wasn't that scalable, and that as an entrepreneur, here was a problem that I thought was worth solving. And the problem was access to capital for founders and access to global markets and knowledge. And to the extent that I can put a little dent in solving that problem, I got into venture. And that was my path. It was really, as a struggling entrepreneur, I wanted to help others.
Amazing. Sonia, if we come to you and you keep on saying you're accidental investor. Do you want to tell us how did you make it to VentureSouq, and how are you creating impact with the Conscious Collective?
Yeah, first of all, thank you so much for having us. And it's so fun to be on a panel with Noor and Heather. Like, we obviously all know each other quite well and co-invest in deals together. So yeah, I would say my path has been pretty similar to Noor. Was not an entrepreneur, but definitely am an accidental venture capitalist, which is kind of the self-label that I gave to myself. I studied politics undergrad and grad thinking I was going to be a journalist. I really thought I was going to be the next Christiana Manpour, and then got sidetracked while I was doing my master's in London and started my career at Microsoft in strategy M&A. And that was kind of the end of my journalistic aspirations straight on. And then pretty much spent most of my corporate career working for old and new media companies. So Microsoft, Viacom, Turner, all media companies, mainly in strategic M&A and commercial development capacities. And when we started VentureSouq, for those who are listening who don't know the story, in 2013, it started very much as a group of friends who started angel investing together. So there were 4 of us. 2 of us went to undergrad together, Tamer and I. The other 2 we met pretty randomly. They had just moved to Dubai, crashed my birthday party, and then we started all kind of getting to know each other as friends and then investing into deals together. What we found back then in 2013, because it was still very much, I mean, this ecosystem is nascent enough, but back then even more so, was that there was an appetite. There were a lot of young professionals in there. At the time we were in our late 20s, and 30s who were interested in investing in tech-enabled ventures, but just didn't have a platform. So, and that was kind of the genesis for VentureSouq. Fast forward 7 years on, we have a network of 1,000 angel investors from the region. We're moving away from kind of the syndicate model, and our main focus now is threefold. One is that we have an investment vehicle focused on Y Combinator, which is an accelerator program out of the US. We have a regional fintech focused vehicle, which we just launched this year. And then the third one is one that I lead, as you said, which is called the VentureSouq Conscious Collective, which is about how do we inject capital into founders in underserved sectors. So whether it be ed tech or agri-tech or environmental tech or financial inclusion or health tech, and really how do we support ventures and entrepreneurs that are using technology to optimize good, whether it be societal good, environmental good, or financial inclusion. And that's kind of my main area of focus right now. So I guess to the people who are listening, especially maybe even the women who are listening, but really this is kind of gender indiscriminate. There is no one path. You just saw that there are 3 completely different paths to where we are right now. So there is no one kind of size fits all path to becoming a venture capitalist or an investor. It kind of happens organically. And I think in both of, in the cases that you just saw right now, we've each had different trajectories and we've taken different parts of our various experiences to kind of help us on our journeys as investors as well.
And I was really inspired by the 3 of you and decided to start learning and studying the venture capital industry. So I did the Berkeley, the Techstar Accelerator, and I'm still learning. So very inspiring. Sonia, before we move on, you spoke about conscious investments. In investments, you usually look at high returns on investments. And I think that contradicts a little bit when they become conscious. How do you find the balance between being conscious and also profitable in terms of investments?
So for Conscious Collective, we're trying to dispel that, right? I mean, I think I worked with Acumen as well in a past life a few years ago. So I've kind of been part of the system. I think what we're trying to say with Conscious Collective is that it doesn't have to be concessionary, what you just said right now. So we're looking at deals commercially exactly the same way that VentureSouq typically looks at deals. We're just hyper-focused on specific sectors and specific theories of change that we want to address. And so when people ask us, well, what are the kind of return expectations? We're telling them, no, we're looking at this as VentureSouq, it's still 20 to 30% IRR. There's no kind of concessionary approach here. We're looking at tech-enabled ventures that are going to scale globally and also have a meaningful positive outcome. And I don't think it has to be one or the other. I think this region is still very kind of 2-pocket thinking driven, right? So very deep pockets of capital, 1 pocket for philanthropy versus 1 pocket for for-profit commercial investments. That doesn't have to be the case. And I hope that after this webinar, you'll see through some of the examples that Heather and Noor and I give that you can invest in companies that are going to have meaningful change and a meaningful kind of leave a meaningful legacy here and make a financial return at the same time.
Absolutely. And that takes me back to Heather. Heather, you've managed funds all your life, and currently, since you've been in the UAE, you've focused on female-founded businesses. And we know that's a bit of challenge because they're quite rare. How do you find them, and why is it important to have at least 1 female founder, as you mentioned earlier?
Yeah, and just maybe I totally agree with Sonia. I've been also in impact all almost all my career, except for the Wall Street portion, was not impact focused, but was anti-impact. But no, I think, you know, it is a myth that you can't do well and do good at this simultaneously, and we see that often in you know, financial inclusion and microfinance, where some of the returns that some of those microfinance banks generate are superior to what most commercial banks do across the emerging markets. But and gender is really, I think, an important part of the impact. Unfortunately, we are not a minority. You know, we're 50% of the population. So there's no reason that the actual, you know, capital access should be limited. So for example, globally, less than 2% of capital goes to female founders. In the US, it's probably about 5%. But actually on this, Raja, I don't necessarily agree. I actually think that half the founders in the region, in the Middle East, are women. Unfortunately, we don't see a lot of them in the kind of the mainstream network. So if you go, for example, to GITEX or some of the traditional sort of like tech conferences, you're not going to see a lot of women. And I think it comes back to who the investors are. So obviously on this session today, we're all women, but normally it's primarily men. So I would say even from when I worked on Wall Street, the venture industry is much worse when it comes to kind of a male dominant just the atmosphere in terms of the venture capital investors. And again, women attract women. So the more that we see women in these seats, and Raja, it's great that you're getting involved and learning more about it, and hopefully will become a more active VC investor as well in the coming time. But having women in those spots definitely changes the outlook for access to capital for women. And so also with Mindshift Capital, our fund thesis isn't built on just charity. There's a really good article that Jesse Draper just published about how women aren't charity. We're actually really good investments. If you get a chance to read it, I recommend it. And what we've seen just from our investments through Wayne, where we also used a gender lens, I mean, we're at, you know, average of 3x in 5 years of investing, and that's all MENA based. That's all Middle East, which, as far as I know, that's very strong compared to the other funds that have been investing over the same time period. So, I think that women do generate higher returns. There have been a lot of studies showing that women are more revenue focused, they're more committed, they raise at lower valuations, which isn't necessarily always positive, but as an investor, it's nice to come in at well-priced companies. They might not end up being kind of the unicorns and the, you know, $1 billion plus valuations, but in reality, most companies aren't. So my feeling is I'd much rather have a portfolio of companies that are going to make it, and maybe exits aren't going to be at 100x, but you can still get to the portfolio returns in a shorter time period and achieve actual trade sales, you know, more realistic kinds of exits than the IPOs, which we know, especially in emerging markets and in the region, is not necessarily a viable exit strategy. So our thesis is really built around what we call the rise of the zillennial, so changing global consumer trends that are driving new kinds of business models. And we focus on 4 sectors: health and wellness tech, ed tech, food tech, and fintech. And those sectors are partially driven by the fact that we see more women in those spaces. So there's lots of data points that, you know, I'm happy to share, but even large funds like First Round Capital, they found that in their own investments over the last 10 years, women-led companies have outperformed by 63%. There's obviously the diversity metric that gets used a lot by McKinsey and the World Bank, around 21% outperformance. So we know that gender diverse teams generate higher returns, and that's really what we're backing. And we also we view it as kind of an arbitrage opportunity, because there's so few funds like ours that are targeting specifically companies where there's at least one female founder, that we actually get inundated in terms of pipeline in the region, but globally as well.
Thank you, Heather. Noor, what do you look for in startups, and how many within your portfolio are female founded?
So the two for us are kind of, I don't want to say they're mutually exclusive, but we don't think about them at the same time. So what we look for in startups is one set, and then whether they're female or not is another set. I think by default, we see more women at the top of the funnel just because I happen to be a woman. And so that kind of means that we get to see more women at the top of the funnel. So a larger percentage are women, which puts us at 30% female founders across our portfolio. What we look for in general are mission-driven founders that are looking to solve real problems and that impact a very large amount of people. And again, back to what Sonia and Heather alluded to, we do not think of sustainability as something that compromises returns. So for us, we focus on 3 of the UN Sustainable Development Goals, and there's a 4th one we're now starting to include. And we can tell you, across the portfolio, there's 2,500 jobs created in the last 2 years. There's almost 30,000 people that now have access to finance that didn't before, so on the financial inclusion side. And then we look at gender. So not just at the founder level, but then also within management. And so we don't make decisions based on that, but we measure these things, and we figure that by asking founders every month for updates on these metrics as well as their financials, they eventually get the point that these things are important. And they start to measure them and manage them more effectively. And then by sharing them with our investors, we also indicate that, look, we are generating venture returns. We're also changing the world a very little bit. And so that's it. And now we're looking at healthcare inclusion. And that's kind of the thesis of our new fund is really, it's half of it is digital health. And I think, I believe that we will see more women in the ecosystem. I think it's a combination of factors. But largely, if you take a look historically over the last kind of 100 years, healthcare and education are 2 of the last industries to ever adopt change or technology and innovate. And so as a result, those are 2 industries that have a lot more females in them as a percentage than other industries. They're just typically more female-driven, healthcare and education for many reasons. And so as these industries come into the whole digitization fold so rapidly because of COVID, we're going to start to see more women in our funnel anyway. So I think that percentage might actually rise as we focus on certain industries rather than others. I'm very hopeful. Again, I don't know if I'm right or wrong. Only time will tell. But I do think we see more female founders in these industries, and these industries are becoming increasingly important with huge potential returns. In general, to answer your first question last and very quickly, it's really about, we look for startups that are addressing real problems across different markets in the region and potentially globally, and founders that have purpose. So when we ask a founder, why are you solving this problem? The answer should not be because I think it can be a unicorn. It should be because the problem matters to me and here's why. And we believe that builds resilience. So when things like COVID happens, these founders still get up in the morning and solve the problem because the problem is so important to them personally.
So definitely COVID created a huge opportunity for transformation and also for growth for startups in general. Specifically the tech startups who were able to capture the opportunity at that time and solve these problems. The one challenge that I continue to see while working with the startups from the region is funding. In the US and other markets, you can easily raise $1 to $2 million in a couple of weeks, if not months. When it comes to the region, this process is very lengthy. And that's the gap that we try to bridge by working with VCs and funds like you with the FinTech Hive. How can we solve this problem in the region, or how do you see the region evolving, or do you even see that happening? Is there any maturity coming in terms of how the investors think? I mean, I work with the startups all the time, and they're asking me for access all the time, and 3, 5, 6 months later, they still did not progress with these deals. What are your views? I mean, anyone can answer. Sonia, maybe you can start.
Yeah, I have a bunch of comments that I wanted to make with regards to what Noor said, which I was in complete agreement with, but I can get to that afterwards. Yes, I mean, is there a funding gap in this market? Yes, this is still a very nascent ecosystem. All 3 of us have been around for a while now. We've seen it grow tremendously over the last, decade, essentially. But there's still gaps, especially at the early stage, because people are still a bit risk averse and don't necessarily want to put their dollars in companies that don't have a product up and running and don't have traction, etc. And then there's a gap maybe in the later stage. That said, I mean, let's not be too pessimistic either. I think the region has made strides. I mean, to be pretty blunt, because I'm French, I feel like everyone and their mother is starting their own fund right now. So, you know, everyone's kind of jumping on this bandwagon right now. I want to start a fund. Now, whether they're smart investors, then is another conversation to have. But I think we're seeing new types of players kind of jump on this bandwagon as well, right? So we're seeing corporates starting to launch their own kind of innovation arm or VC arm, et cetera. We're seeing family offices enter the game, et cetera, as well. So I think there is kind of there's diversity in terms of the types of players that we're seeing in the region. Is there room for improvement? Definitely. I think all four of us have been approached left, right, and center by entrepreneurs who are constantly, you know, why aren't you investing, or, you know, I need money, etc. Each of us have obviously our own mandates. My advice to the entrepreneurs who are listening: do your research. Like, we diligence you guys, you should diligence us as well. What type of investor do you want on your cap table? And don't just reach out to us randomly on LinkedIn with copy pastes where you sometimes get the name wrong. I think all of us have gotten that before. Be very targeted. You know, hey Heather, I just read this article about, you know, what you said about this. It really resonated for XYZ reason. This is what I'm trying to do. Would love to get your feedback or soundboard. Do the same with Noor. Do the same with Raja or with me. That's a lot more effective. We all get probably hundreds of LinkedIn messages a day, to be perfectly frank, from random entrepreneurs from around the world. But be targeted and make your case to us as to why you feel we can add value to you as an entrepreneur, investor to us, but as an entrepreneur for you. Because yes, there is a funding gap, but you can also pick the type of investor that you want. And just to loop back to what Noor was saying before, 100% on everything that she said, and even everything that Heather said as well. But specifically, so in our case, we're also gender indiscriminate. So as VentureSouq overall, we've invested in over 160 companies globally now over the last 7 years. Conscious Collective, we just launched in March, and we've made 9 investments as of this week. And funnily enough, 44% of the founders are female. This was not me saying, oh, we need to tick a box. And it just happens that the entrepreneurs that we thought were really strong happen to be female. So I mean, we know we hit 13 out of the 17 Gs through these 9 investments. In our case, impact measurement is actually key. So actually half of our investment memo is impact measurement focused. And we work with the entrepreneurs on what metrics to track, not just the commercial metrics, but the impact metrics, because that's a big gap in this region as well. And again, to the entrepreneurs that are listening, you are increasingly going to see investors ask you to track those impact metrics. We're seeing the Andreessen even for their fintech portfolio companies. We're seeing a lot of the big players doing it now. It's going to trickle down to this region eventually. You have examples of 3 investors in front of you who do look at impact KPIs. So of course, we look at the commercial growth, etc. But we want to get a better sense of what is the direct impact that you're having, whether it be environmental or social, societal, or kind of around financial inclusion, and what are the indirect impacts as well. And there's a variety of tools that you can use to do that. But that said, I will say that there's a gap in this market when it comes to startup support around impact measurement. Yeah, that was a long-winded answer to your, but yeah, I mean, I think we should be hopeful to answer your question. And I think we're seeing a lot more players kind of join the party. And you know, I feel like any market that you go to, there will be entrepreneurs complaining about a funding gap. And we're doing our best to kind of fill it in our own way. The governments, I think, also have I'm from France, and where the government is very active when it comes to kind of addressing these funding gaps. So you have BPI France, for example, like they specifically look to invest in early stage kind of pre-seed startups. Maybe we need to see more of that in this region where the government really kind of steps into play and actually invests directly. But yeah, I guess that's my take on it.
Thanks, Sonia. And actually, back to the government, especially in the UAE, I think there is a very strong support from the government when it comes to investment. So if you look at the DIFC FinTech Fund, that $100 billion that has been already invested in supporting FinTech startups, or you look at the Khalifa Fund or the Future Foundation, there are a lot of funds and opportunities available to support from a government perspective. Now, Heather, if I may ask you this question, where do you see future trends in terms of tech where most investment opportunities are going through? Do you still think it's going to remain FinTech? Obviously, I'm the fintech advocate, shift into.
Yeah, no, I think I actually think around. I mean, if you think about this newer generation, right? They're all going to school in COVID. Kind of the Gen Z. I'm not talking about even millennials. So I actually think that this is the largest historical impact that this is going to make in their lives and their values. And I really think that, and again, I've got my own impact biases, but I think the shift in their values, and I think for a lot of us, I mean, really, you know, COVID has really thrown many of us where we've just sort of stepped back and really thought about what really matters in life. You know, it's people, it's the planet, it's animals, it's things like climate change. It's not, you know, electing dictators. It's, you know, I mean, so many. I'm in the U.S., so we've got, you know, the election very soon. So that's weighing heavily on my mind. So I think that, again, you know, and again, maybe my own biases. I mean, I just don't get excited when I see another, you know, deep tech AI, you know, whatever, some tool that is being built and can have useful applications, but I get more excited about the actual change that's being created from the companies that founders build. And I guess, and I think also, Sonia, I was going to ask you about the 40% women, because just what we always observed, especially at Wayne, was that a lot of the women were more focused on impact companies. And again, I have, you know, other views on this as well, but I think women generally try to solve problems that are relevant to their own lives, and somehow seem to be more community focused and more concerned about the problems that we experience at even a social level, beyond just our own personal community, but even a global community. And that's kind of one of the unique things of COVID, is that we're all experiencing the same thing simultaneously, whether you're in China, in France, in Mali, wherever you are, we're all experiencing the same challenges, maybe on different levels and different pain points. Not everyone has, you know, second homes in Aspen or wherever to kind of flee to, but I think, you know, it's really resonating in terms of the challenges that we face as a society and where are we going, you know, just at very existential questions that I've seen. Even, you know, family offices that are traditionally investing in kind of the oil industry are now making big changes and shifts into more of what we call the ESG, you know, industries. But really, when you think about it, it's just about who are we as humans, where are we going, what's our purpose? I mean, very, very big questions, but I think a lot of that really got raised by COVID and the pandemic. And then what is our life going to be like going forward? And the ones most affected by this, of course, are the younger generations, because they're trying to go to school. Their whole social lives have been totally overturned. We as parents who have children going through this are grappling with this daily. So I think we'll see very, very different kinds of tech companies that are going to emerge. And I don't think we even know what those are yet, because it's so new and so early. But my sense is it's not going to be sort of the traditional fintech that's creating a platform for financing, or, you know, an API for a bank, or, you know, kind of, I would say copycat types of companies. I think they're going to be very unique and focus on solving problems that might not generate financial returns immediately, but there are lots of different ways to measure value. So I think that's more the trajectory of what we'll see over the next kind of 5 to 10 years.
To add to that as well, I think all three of us, and Raja as well, actually, are kind of all on the same wavelength here. But I think what Heather put her finger on is exactly right. I think obviously this is a time of introspection for everyone, but it's also, I guess, for the investors who are listening, you know, what do you want your legacy to be? This is something that I ask each of the interns who join us. Like, what do you, poor guys, they're like 2021, right? But I'm like, what do you want your legacy? What do you want your legacy to be? And they come up with amazing answers, by the way, because this next generation is way more mature than we were at their age. But, you know, as an investor, for the ones listening, what do you want your legacy to be? Because you're in a fortunate position that you have access to capital. So how do you choose to give your capital more purpose and more impact? And I think this is an exercise that all of us have done or in the midst of doing. And, you know, in our case, I mean, I can speak for Heather, Noor, and I, like, you know, it's reflected in the personal investments, the investments that we've made. Now, own theory of change, essentially, to the firm kind of level. This is really an invitation to everyone who's listening of thinking about this. If you haven't thought about it already, think about that now. What do you, kids, like, what do you want to leave for them down the line? Because, you know, I think region, everyone thinks about social enterprises and kind of, etc. But I mean, there's a whole kind of pool of companies. Look at the ones, if you look at some of our portfolio companies, that are actually contributing to and accelerating meaningful change. And those are actually very good investments to make. So it's not like there's not enough companies out there that are looking for capital, but it's really a question of choice in the end. So it's your choice to decide what types of companies you choose to back.
Absolutely. I agree with you, Sonia. And I think, again, COVID, with all of its unfortunate impact on all of the world, has definitely accelerated the digital adoption, whether it's transformation or it's only getting to use these platforms. Most of the ladies I know who's never touched a computer has been forced to understand how to deal with technology to assist their kids. They all know how to use Teams and Zoom and all of these technology solutions today. And I think that's a great opportunity to introduce these women to technology and leverage on that, because it's a barrier. Once you've interacted with it, you actually can be more comfortable being creative and working around it. At the DIFC FinTech Hive, we launched Accelerator, which is a female talent accelerator program. And the three of you are amazing partners with us in this program. And the main idea was to introduce women from the financial services sector into technology innovation and all the startup ecosystem to inspire them, come up with their own solutions, technologies, or maybe join a company within that capacity. Looking at the three of you here and with all of this inspiration, how can we engage more women within the investments industry as a career move? How do you think we should approach that? Maybe Noor can give us your view.
Yeah, I mean, I think it starts at an early age. I think, you know, there's 2 points of entry. One is when you're in your early teens and what you're encouraged to do with your time and your capital. And, you know, a lot of young boys are encouraged to set up a little kind of E-Trade account or some sort of stock trading account and trade stocks, right? And a lot of girls are not. So if you take a look at that as an entry point, that by the time boys are 18, they're comfortable and confident and they know exactly what they're doing and how to do research and, you know, how to invest in Apple and how to, you know, and the fact that these things are possible. So from a really early age, there's this kind of mindset on finances a fingertip away and get involved. And so if you take a look statistically, boys versus girls are just not as encouraged to do that. And then once you graduate college, or even when you study in college, you know, girls are much more encouraged to do PR and marketing and communications, and boys are much more encouraged to do engineering and those sorts of things. And so I think along the journey from being young, it's important to engage women in technology and in finance. When we take a look later on and women do startups, more often than not, if we see things early, the female founder says, I'm going to outsource my tech to wherever, India, Eastern Europe, or something. And if you're building a technology company with outsourced tech, it doesn't really make sense. So hire a CTO, find a CTO, build it in-house, know what you're building, understand it, you know, like really start to read up on it. You're not going to have to do the coding, but at least understand it, right? And then you're much more likely to be funded. And that's kind of the first thing I would say is don't ever kind of get to a Series A where you're still outsourcing your tech. It looks weak in our humble opinion. And the other thing I would say is, you know, take care of your cap tables. The next thing the next challenge we find for a lot of female founders is they don't negotiate as much earlier, and their cap tables are generally, they own less as a percentage of their company than guys at the same stage in development of the company. So those are the things. So they become discouraged. You say, how can we encourage women? Well, if you're raising your Series A or your Series B and you own less than half your company, you're not going to be very encouraged. So those are the things along the way that I think along the journey, different pain points that women face that we can kind of change the cultural mindset and the ability and the skill set required to achieve more success.
Sonia and Heather, I think both of you have your own initiatives to engage more women. So maybe Sonia can talk about Conscious Collective, and then maybe Heather can talk about Wayne and how to use that platform to educate women about investments and then making them part of the journey. Sonia.
Yeah, I mean, so I guess for on my end, the most recent initiative that we launched is the Conscious Investor Fellowship, which we're doing in collaboration with NYU Abu Dhabi, KAUST in Saudi. I saw some of the fellows are actually on this call in Saudi, Shara in Sharjah, and Hub 71 in Abu Dhabi. So it was very important to me that this be a pan-regional endeavor, not just a, Dubai versus Abu Dhabi versus Sharjah versus, KAUST Saudi type of thing. So it was a by-invite fellowship. It's an investor education fellowship focused on nurturing the next generation of impact investors from this region. We were set to have 25. We ended up with 32, and we actually have a wait list for the next one, which is fantastic. This cohort is 57% female, some of whom are on this are listening in right now, which is amazing. I mean, 57% female investors in this cohort. I'm so proud of that. Most of the fellows are based in Saudi, in the UAE. We have one from Bahrain, one from Egypt, and one from Europe that has an interest in this region. And the idea that we're going to continue building this up, right? So this is the first cohort of 32 conscious investors from the region. We'll do it again next year, inshallah, and the year after that, and start building this new layer of investors coming out of this region that will hopefully invest and co-invest alongside all three of us.
Amazing. Heather, do you want to talk about Wayne and how you include women to understand investment?
Sure. Yeah, so Wayne, I mean, really part of why I started it was just to get women more involved in investing, and there's sort of this, I think, perception that angel investors are, people who are billionaires and have a lot of capital to invest. I mean, most angels who start, you can start with small amounts of money, and especially now with some of the crowdfunding platforms, I mean, literally $500 you can get involved in investing in equity or convertible notes for startup companies. So, the mission of Wayne was really to get more women engaged in investing. All of the investors are women. And that included also an educational platform. So really getting women involved in learning about investing increases also their self-confidence when it comes to investing. And I guess, I never had that self-confidence gap because I come from a big math and engineering family. So it was just sort of in my DNA, or at least that's what I always thought. And then I started to realize, wow, like I'm not the only woman in my finance classes because I'm have different talents than they do. It's just that these women haven't been encouraged and don't have the self-confidence to sit in these classrooms and be, one of the 50 students in the classroom. So a lot of it really is just about getting women to be more feeling, stronger, more self-confident, whether it's just going to be conversations with their financial advisors, their husbands, their fathers, whatever it is. But once women, I think, start learning together, and Wayne is a very collectivist-based platform. It's really about women investing their capital, investing together, which is actually much smarter because it spreads the risk as well. I mean, that's what we always saw in group lending with microfinance, where women want to be involved in group loans, not individual loans, which are riskier, whereas the guys want to be on the individual loan side. So a lot of it is really just women investing together, learning together, and once they feel like they're informed and educated, they're much more likely to invest. And also doing due diligence, working together on due diligence teams, preparing an investment memo. Whether women become serial angel investors wasn't really the goal. It was really about increasing self-confidence of women and getting involved. Women are smart. They like to put in a little bit of money, see how it does, and then they'll put more in, if it does well. Unfortunately, it does take a long time, I think, to get to that level where women are take on the risk, especially that we take on in venture capital. But I would encourage women on this call who are interested, and it doesn't have to, if you're an entrepreneur. We just had actually one of our founders from a a cell-based seafood company, Sandhya Sriram. She's the founder and CEO in Singapore. And they basically are creating shrimp without pain and without water. So very sustainably driven, but it's a totally new form of technology that basically allows shrimp to be regrown through regeneration of cells. So she just invested in the first cell-based egg company in India. And I think it was I don't know what the check size was, but the idea is you're also getting involved with not just your money, but also you're helping to build companies, so you can do other things to help these companies grow. And what I've seen often with Wayne is that women might not, like picking stocks on the stock market, but they really like getting involved and being hands-on with companies and helping those founders to grow in different ways, whether it's helping them build out their marketing plan, making introductions to new sales channels, helping them expand into other markets, getting involved on boards and governance. There are lots of skill sets that founders need that they can't afford to hire. So angel investors really can play a strong role in building and creating value in these businesses. And it's also a lot of fun. I think that's why all of us do it. We didn't talk about that, but it's also really fun and really inspiring to see founders and to be part of the journeys and to have the privilege to work with such driven, motivated people.
Amazing. We have some questions, by the way, which I'll get to. But before we move to questions, Noor, since you've sat on many investment committee meetings, which perspective women bring to those committee meetings? And why is it important? I sit on the investment committee for the DIFC FinTech Fund, and it's interesting to see an angle that's usually missing, where women usually have the first thought to look at. What is it from your view, Noor?
So, besides the fact that we have more, I think, of an impact lens, because we think about society as, it's kind of like our role to take care of kids and society and everything culturally. So we tend to think a larger approach. I think women tend to be, in my opinion, they tend to have more of a systems approach to problem solving and to looking at companies rather than a corporate approach. So by that, I mean that, the individual kind of single problem, I'm solving this one problem, this is the company, this is what's important, kind of single-minded, versus thinking, if I'm solving this problem, what does that mean for this, for that, for the next thing, and is there actually a feedback loop around the system, around the community, around the culture? The simple example was when Coca-Cola had the bottling plant in India, right? And they were drawing water from the resource, they were drawing water from a river, and ultimately that river started going dry and Coca-Cola lost its bottling license. So if you had a systems approach to solving that, you would be like, okay, well, we can't overdraw that because it then has the impact of X, Y, and Z. And then for Coke itself as a business, it's terrible, right? But you have to identify that within the systems approach, there are multiple stakeholders, there's multiple people that get involved that are impacted by your decision that may come back and kind of bite your business and really hurt your business. So I think when men think about it, they tend to think very much like, this is the company, how am I impacting things? When women think about it, because from a younger age and culturally and society has us really thinking about many different stakeholders, we tend to take that into the boardroom and the investment committee with us. And that if the company does X or if the company is solving this problem, what is the impact on all the other stakeholders in the community? And so that is a lens that I've consistently found over, my 12 years sitting in investment committees and boardrooms of companies, that this is how the biggest difference, I think, when women tend to lend their voice in the room. I don't know if that's helpful, but that to me is the one biggest thing that I consistently find.
I totally agree with you. I'll take 3 questions because we have almost used all of our time. It's been an amazing conversation. So whoever feels like answering it, I'll read them in order. So the first question is from Anisha Oberoi. How long does a startup have to be in operations before a female founder can approach you, all 3 ladies, or one from the 3 ladies? From Anisha Oberoi, founder of Secret Skin, sustainable beauty platform.
So we take a look once companies are about $1 million in revenue, sometimes a little bit before. We like to engage with the founder once they're halfway there, and kind of get to know the founder over a little period of time.
I guess on our end, there has to be some level of traction, maybe not as much traction as Noor. So we look at seed, for Conscious Collective, again, we look at seed plus and series A. So all the way from seed plus to pre-series A, series A. For us, the most important is that that there is some level of traction, that there's an appetite for your product, and that we can see the opportunity for growth. So yeah, as Noor said, I think for the entrepreneurs on the call, it's not just about, oh, I need to fundraise, let me reach out to Noor, Heather, and Sonia. It's more about building the relationships first. So exactly what Noor said. That's very important because this is like a marriage. You know, we're in this together. We're not just dating. This is proper marriage. And so, you know, if we're going to be in this relationship for the next, whatever, 5-7 years or more, it's important that we be on the same wavelength. So I would definitely encourage the entrepreneurs on the call to start building those relationships way before their actual fundraise.
Agree. We have a question from Shahid Javed. He says, being a VC, the investment would be of more interest if you are able to get more equity. How do you balance the investor's equity interest to the entrepreneur's motivation by keeping more of the equity to themselves?
I think the answer to that is very, very carefully, but I'm sure Heather has a more detailed answer.
So we always want founders to own the majority of the business through Series A, so on a post-money basis. So usually if you do the math backwards and you model out your cap table, you can figure out, you know, what you're selling off. So is it 10% at seed and then maybe another, you know, 5 to 10% at a bridge? So just, you know, it depends also on your your option pool. You know, generally we recommend between 10 and 20% options, but again, it depends on how large, you know, the management team is and what their skills are and the founders. So there are lots of different factors, but as a rule of thumb, we always say, you know, majority of the business should be in the founder's hands post Series A.
I agree with you because he's the one who will make sure that it's still running and profitable.
Yeah.
Can I also just add to that? I think for the investors on the call, I think at least from what I saw, you know, over the years is that oftentimes, especially regional kind of individual investors say, oh, I want to invest in a company, but I want 50% of the company. No. So for the investors on the call, no, you do not want 50% of the company because just as Shah had said, you want to keep that founder motivated and incentivized to continue on their trajectory, on their journey. So it's not, I'm not going to use the word nice, but I mean, like, it's really not a good idea to actually expect to have half of the company because you invest a small amount into an early stage company. It's really important that you still allow for ownership by the founders for a while, just as Heather said.
And you won't be able to raise other funding, right? Because other investors won't come in. One of the biggest reasons we don't invest is because the cap table is flawed. And usually that happens very early in the seed rounds where the founder sells off too much of the business to a greedy angel investor or naive angel investor.
So we have one more question. Someone is asking, what is the minimum/maximum tickets you invest in early stage? And do you invest in convertible notes?
All right, I guess I'll go. I mean, at VentureSouq level, we've invested from 100K all the way up to 4 million. So that's kind of historically what we've done. I would say the sweet spot has been more around the like 750 maybe kind of range. As Conscious Collective, because this is the first iteration, it's a small kind of micro fund. We invest, and because we invest very early, we invest up to 100,000. And yes, convertible notes as well.
Thanks, Sonia. I'll take the last question from Man Rizuki. He's saying, first, let me congratulate you for your great achievements. Looking forward to further inclusion as you take your next steps. Going back to an important driver by pandemic and governments, how do you see the impact on investors and startups to their business growth and continuity? pandemic impact on investors and startups, on their business growth and continuity?
All right.
Go ahead.
No, Noor, you go. I'll follow.
So I think it's not as negative as one thinks. So I think that in some sectors like digital health and education and future of work and agri-tech, and I can keep going, technology has actually proven that it's quite resilient. In other areas, it's taken a little bit of a harder hit, but generally I think that the takeaway for most people across the emerging markets is that technology is here to stay. It can facilitate and it can be a huge instrument for growth if used properly, as opposed to maybe a year ago where people were wondering, is this a fad? Is it an overdue fad? Can't we just stay in retail? The answer is no, you also need to be in e-commerce. So I think that this kind of solidified and answered questions that were way overdue.
Thank you so much, Noor. I would like to thank you all, ladies, for joining me today. It's an amazing conversation and we have a lot of questions. However, we will get to the people who asked them individually. I don't want to take more of your time. Truly appreciate your support and engagement. Thanks, Heather, for joining us from the US. And this is not the first time. She's always in the world, makes an effort. And Noor is in our office in the FinTech Hive. So thank you so much, Noor. Thank you, Sonia, for always supporting the FinTech startups ecosystem. I look forward to working with all of you. And I honestly look forward to an initiative driven by all of our organizations to engage more women in investments. Thank you, ladies, and look forward to seeing you soon.
Thank you so much.
Thank you. Thank you.
Bye.